What if I told you that most people think they're investing when they're actually gambling? Not in a neon-lit casino in Vegas, and not with plastic chips. They're doing it in front from their phone, inside their brokerage account. And the worst part, they don't even realize they're doing it. They think they're building a future, but they're actually just playing a high-stake game of musical chairs. Welcome to TradingBits X. This channel is all about decoding the economy from the ground up. No noise, just signal. Today we're stripping away the myth. We're going to define exactly what investing is, why your brain is biologically wired to prefer gambling, and how you can flip the script to actually build wealth. Before we dive in, I want you to be 100% honest in the comments. Have you ever bought an asset, a stock, a crypto coin, or even a house, strictly because you saw someone else making money out of it? Not judgment, just type guilty or not for me below. Let's see where this community stands. If you value logic over hype, hit that subscribe button and turn on notifications. We're building a mission to build a community of sophisticated investors. If you find value in this breakdown, give us a like. It tells the algorithm that financial literacy matters. The invisible line. Investing versus speculations. On the surface, investing and speculation looks identical. You open an app, you click buy, and you hope the numbers turn green. But under the hood, the mechanisms are worlds apart. The investor thesis. Investing is the act of putting capital to work in an asset that generates value. If you buy a share of a company, you're buying a piece of its future cash flow, its intellectual property, and its management ability to solve problems. You're a business owner. The speculator hope. The speculation is different. You aren't necessarily looking at the value of the asset. You're looking at the price. You're betting that tomorrow someone else, the greater fool, will be willing to pay more than you did. Think of this way. Investing is buying a cow for the milk. Speculation is buying a cow hoping the price of beef goes up tomorrow so you can flip it. Do you consider yourself a business owner or a price watcher? This distinction changes everything about how you sleep at night during a market crash. Tell me your perspective in the comments. The dopamine trap. Why is it so hard to tell the difference? Because modern finance has been gamified. In the old days, you had to call a broker to place a trade. It was slow, it was boring. Today, your phone vibrates with breaking news alerts. Apps use confetti animation when you execute a trade. The psychological reality. Investing is supposed to be boring. It's like watching paint dry or grass grow. You're looking for excitement. You're likely speculating. When you bet on a meme stock or a trending coin, your brain releases dopamine. It feels like a sport, but wealth isn't built on dopamine, it's built on discipline. Most people lose money because they confuse activity with progress. Redefining risk versus reward. Most people think, to make big money, I have to take big risks. At TradingBits X, we disagree. Risk isn't just the volatility of a stock price. Real risk is the permanent loss of capital. And here's the secret. Risk is often a function of knowledge. If I try to fly a Boeing 747, the risk is 100%. I will crash. If a training pilot flies it, the risk is near zero. The plane is the same. The knowledge of the operator is what changes the risk. In the market, if you don't understand the underlying economy of what you are buying, you are taking a calculated risk. You're just gambling. The time horizon, your secret weapon. This is the part where most people fail. They have a microwave mindset in a crock pot world. Your time horizon is the single most important factor in your success. Short term, you are competing against high frequency trading bots and Wall Street algorithms that can trade in nanoseconds. You cannot win that game. Long term, you are competing against human emotion and impatience. This is a game you can't win. When you extend your horizon to 5, 10, 20 years, the noise of the markets disappears. You stop caring about what the Fed said Thursday or what a CEO tweeted on Friday. You start caring about the compound of value. To wrap this up, investing is a process of discipline. It's the radical allocation of capital into assets that grow. Anything else, chasing trend, reacting to news, or betting on price move is just speculation. If you want to be a gambler, go to Vegas. If you want to build a legacy, start thinking like an investor. If this video helped you clarify your strategy, please share it with one friend who needs to stop betting and start investing. Don't forget to like and subscribe. It's the best way to support this channel. But there is a catch. Knowing what to invest is only half of the battle. To truly reach financial freedom, you need to understand the engine that drives it all. In our next video, we're diving into what I consider the most important concept in finance. Is the reason why a small amount of money today can turn into a future tomorrow. It's quiet, it's slow, and it's the only way to build the exit the rat race wealth. We're talking about compound growth. You don't want to miss this video. It's the key that unlocks everything we talked about today. And remember, money, markets, we're trading the future. See you in the next one.